Alright traders, I'm back again with another video, and this video is going to be a little different than my previous videos because I'm going to take time to teach this Ichimoku system, every single thing about the system from a beginner standpoint. So if you don't know anything about the Ichimoku system, this is the video for you to watch. And if you do, this is probably still the video to watch because I'll probably be trying to throw in as many things as I can remember right off my top of my head. But a lot of things I start to remember as I go, or when I'm done with the video and I'm like, man, I wish I would have put that in or said that. So I'm gonna try to make sure I got everything included that I need to talk about this system, so that you can get all the aspects and all the details of this system and understand it and know it. Alright, so basically the whole system is called the Ichimoku Kinko Hayo. So Ichimoku stands for one glance, Kinko stands for balance or equilibrium, and Hayo stands for chart in Japanese. And the system was basically developed in like 1930s by Goichi Hisada. And the purpose of him creating this system was so that he could create a system that could analyze the charts with more detail but less time. So he wanted to be able to do it quickly. And I think he achieved that because I can look at this chart and I can tell you the bias of this chart just by looking at it in like 1 second. And then I can tell you if a trading opportunity is near. So 5 seconds I can analyze this whole chart and move on to my next chart. I don't have to spend hours and days looking at a chart to determine if there's going to be a trade coming up or not. And I know where the support and resistance levels are right off the bat just by looking at this chart. And I'm going to show you all that, how to do that, how to know that, and how to understand all that. The things that this system offers is like the things that you can get using Ichimoku is it indicates momentum for you. It shows support and resistance. It shows entry and exit signals. You can use it for stop loss, trends, market bias, and basically that's it. But that's a lot. Also, you can get your Fibonacci retracement levels with this system, and I'll show you that in a little bit too. So we'll get into everything, but just looking at this chart right off the bat, you could see all the components. And most people don't even take time to learn the system because once they open a chart and see all this, they're like, man, this is just too complicated, too much stuff to learn. But really, it's not. If you take time to learn these components very quickly and understand what they do, then you can start learning the system and learning how everything goes. Okay, so yeah, it looks confusing to the new guy, but once you start trading this for a little while, learn to take time to know this, it's not at all. And when I first started trading the system, I looked at it and I said, man, this is way too confusing. I'm not even going to mess with that. So I let it go, and then maybe a few months later, I came back to it and I started to pick some things up. So I started taking lessons from people and learning from two people in particular, and they taught me a whole bunch about this system, taught me how to trade it, and just gave me personal lessons, and it's been a benefit to me. So now I'm going to pass that on to you guys. So let's break this whole thing down. The components of this system are the Tenkan-sen here, which is going to be the light green line. So remember these lines. The Tenkan-sen, it's light green. Your Kijun-sen, it's going to be the dark blue line. Your Chikou Span, which is going to be this pink line here, the dotted pink line, the dashed pink line, and then your Kumo cloud, which consists of lines on that also. Now, when I'm talking about lines on the Chikou Span, these are lines that I really don't, take into effect as like, oh, I have to learn this line, I have to know this line. I learned the whole Kumo cloud as one, but the lines are going to be your Senkou Span A and Chikou Span B. So on an uptrend, Senkou Span A will be on top, so this would be the line right here going up, and then Chikou Span B will be on the bottom, and that will be this line right here. So it's the outline of the cloud, the whole outline of the cloud. So your bottom line and your top line, those are your Senkou Span lines. So let's take this chart as if we're just starting this whole thing. Let's remove it. So we remove that chart, and then we're going to add the chart, but we're going to only add one part at a time so that we can talk about it. Now normal settings for the Ichimoku system are going to be 9, 26, and 52. All right. So we're going to talk about the Tenkan-sen, and it's going to be the light green. We're not going to take that off of here, but we're going to take everything else off of here for now. Alrighty. All right. So now you only see one line on the chart, and this line is your Tenkan-sen. So the Tenkan-sen is usually known as your signal line, and how we get the Tenkan-sen is basically measuring the highest high and the lowest low divided by 2 for the past 9 periods. So by applying the prices high and low range for the past 9 periods, we're measuring the market's equilibrium. So it's like a moving average, but unlike a moving average, which measures the closing price, we're measuring the highest and the lowest. So it's basically giving us the average, and moving average is measuring, your closing prices. So when you're getting that average, the average of what the market is doing, the average of what price is. All right. So usually if things stay pretty normal, you're going to be in that average, right? So to get the average is probably better than to get the close every time, because you can have an outrageous close one time which would throw everything off. But then if you have a bad a high high close and you put that in with the average, you're still averaging that out. That's not going to throw everything off. All right. So when you look at this chart, well, just looking at this line, you can see that how price goes back and forth around it, and sometimes it acts like a support area or resistance area. I don't really use it much as that myself, but it's been, and the system is, it's known as a one of the support and resistance levels. So each line is a support and resistance level. So everything that I told you, the Senkou Span A and B support levels, Tenkan-sen, Kijun-sen support levels. So those are the 4 support levels of the system. Um, if the Tenkan-sen is flat, this is signaling that we have weak momentum in the market. Okay, but if it's angling up or angling down, that shows that we have more momentum in the market. So flatter is less momentum, and sloping is more momentum. So you could tell when the market has momentum or when the market momentum is slowing down. Okay, basically you see this momentum here, and you see where it kind of slowed down right here, and here it is. So here's the market trending up, and you can see this moving right with it. That's showing you the momentum. Then you can see where it's flattening out. This is where the consolidation was happening, where the pullback happened. And then you can see the momentum again. It took off, and now it looks like it's sloping back down and slowing down. It flattens out, and then this is starting to pull back. Okay, so that's the Tenkan-sen for you. Just remember, it's the highest high and the lowest low divided by 2 for the past 9 periods. All right. So then we'll go on to our next line, which is going to be our Kijun-sen. Let's add that to the chart. No, we don't want to do that. We want to add that to the chart, the Kijun-sen. Now your Kijun-sen, this is the dark blue line. All right. The way we get the Kijun-sen is we measure the highest high and the lowest low, and that's divided by 2 for the past 26 periods. So this is the Tenkan-sen is your past 9 periods, and your Kijun-sen is your past 9 periods. I mean your past 26 periods. So this is the slower, this is the faster part of the market, and this is a more slower market, slowing it down. So this is showing you medium range momentum in the market. So the Kijun-sen measures your medium term price momentum, and your Tenkan-sen measures your short term price momentum. Okay, so that's just the difference with those two. Now you can see the Kijun-sen also acts as a good level of support. So therefore, we use it as stop losses and change the trend. You can see where price broke up through this Kijun-sen, and then it came back and found support at the Kijun-sen, the flat line right here. And this flat line is showing you that the market momentum has slowed down, and the market momentum, it comes right to that line there. So sometimes we look at the Kijun-sen as showing you a change of trend. Okay, so when price crosses the Kijun-sen, a lot of times we'll say that a change of trend is occurring. And here it goes. It crosses there, and then the market drops. It was above here before. Price was above the Kijun-sen, and now price went below the Kijun-sen. So now we're saying that change of trend is happening. So here we're bullish, now we're bearish, and price is dropping, dropping. Price closes above there, but then it comes right back. And look how it's finding resistance at that level. See that there? And then it comes back, and then it breaks. So now we're saying, well, maybe a change of trend again. And sure enough, change the trend. The market bounces off of there, holds that as support. So the Kijun-sen is a very strong support level. You're going to want to use it as your stop losses. Sometimes it's going to be a deep stop loss, so you may not want to use it, but with the system, it's one of the areas for using your stop loss. You could see this flat level here, and you could see where the market lined up and found support at that flat level there. Same thing here. Now this is slowing down. The slope of these two together shows you how much momentum is in this market. And now if you see these starting to tail off and then flatten out, there's no momentum in the market. And if you're looking for a trend and you're expecting something to go long, if these aren't moving, you're not going to see anything long. But now, let's show you a different example. Well, here we'll do this a little. Here the Kijun-sen is flat, but the Tenkan-sen is angling up and starting to move. So the Tenkan-sen started moving before the Kijun-sen, because this is showing short-term momentum, and the momentum started to change, and it took a little longer for the Kijun-sen to see it, because this is measuring a longer time period, 26 period, so it's showing you a more medium-term momentum. So you see that flat line, but this is starting to go, and here this goes, and now they both start going, and then you could see the momentum of the market. On to the next one. So we got that, and we want to go to our next thing, which is going to be our Chikou Span. Well, let's go to the cloud now, because the Chikou Span is going to be very important with some other aspects. So I'll change this. And we want to put the cloud in there. Actually, let's go one line at a time. Let's go with Senkou Span A. This is Senkou Span A. And now looking at it like this, you probably don't understand it. But Senkou Span A is going to be in a downtrend. It's going to be underneath Senkou Span B. So there's another line up here. So there would be a line up here, and then this Senkou Span A. And between those two lines would be shaded, and that would be your cloud. So I'm below Senkou Span A in a downtrend. I know this is bearish. And sure enough. Alright, so Senkou Span A right here. And the way that we get the readings and understand what Senkou Span A is all about is basically this. Senkou Span A is taking your Tenkan-sen and your Kijun-sen, divide it by 2, and then shift it 26 periods. So it's basically the average of your Tenkan-sen and your Kijun-sen, but 26 periods ahead. So it's the average of these two lines shifted 26 periods ahead. And I'll show you that. You see these two lines right here, and you see that's in the middle of these two lines, right? Way over here, 26 periods later. So here it is. This is 26 periods right there. And look at it, it's right in the middle of these two lines. So basically you get that by measuring your Tenkan-sen and your Kijun-sen divided by 2, which would give you the average, which would be between them, shifted 26 periods ahead. So it's 26 periods in the future. So this is where we start to get our future support and resistance areas. Let's add Senkou Span B. Whoops, keep doing that. I keep doing that. So Senkou Span B, we want a line, solid line. Okay, so now here's Senkou Span B, and here's Senkou Span A. Now B is the blue one, A is the brownish one. Now in between these would be the color of the cloud, but I'm going to show you that once I just explain these lines again. Now A is going to be underneath in a downtrend, and B is going to be on top and an up in a downtrend. In an uptrend, A is going to be on top, B is going to be underneath. So there you would have a twist, which would be called the Kumo twist. They twist and crossed each other. So that's a Kumo twist right there, okay? And I don't think it's really important to know that A is going to be on top and B is going to be on the bottom, because you're going to be studying the whole cloud, not these two lines separately. But these two areas are support and resistance. And then how do we get the Senkou Span B? It's going to be the highest high and the lowest low divided by 2, and that's going to be for the past 52 periods. So this is the past 26 periods, and this is the past 52 periods. And you can see they're both 26 periods in the future though. Because look where we are. This is where the cloud would be end right here. 26 periods. 26 periods. So this is shifted 26 periods, this whole cloud. Okay, so let's add the cloud. And before I add the cloud, I want to take away the spans again. So we're going to take the spans away because I want to show you something that I didn't. Okay, so now we have just your Tenkan-sen and your Kijun-sen. Remember I told you that Senkou Span A and B cross, and that would be called a Kumo twist when they cross each other like moving averages. Well, these two crossing each other like moving averages right here, this would be called a TK crossover, and this is one of your trading signals. And I'm not going to get into that yet, but the thing is, here's your cross. And usually when Tenkan-sen is on top, we're in a bullish market, but when Tenkan-sen's on the bottom, we're in a bearish market. So here's the bullish market. Tenkan-sen's on top of Kijun-sen, and price is above both of them. So that's a bullish market. But here we had a crossover right here. Tenkan-sen was above, but then it went below. So now Tenkan-sen is below Kijun-sen, and that's a bearish signal. And you can see price is below both, and it would be below the cloud, and that's a bearish market. So this, now you're starting to see how we can just look at things really quick and know that we're in a bearish market or bullish market, and we want to know that right away, just so we know which way to go, long or short. Then we find our opportunities, right? All right, so let's go to put the Kumo back in here with the shaded in area. So I showed you the spans. That's the outside of the that's going to be the outside of the cloud. So now let's color the cloud in. So we got that, and we put Chikou Span A back in there, solid line, and we color it back in. We'll make it 70%, and then we apply that. And there you go. Almost all the components of the Ichimoku system are here. So now you see the cloud. Now everything's starting to show itself to you. All right. So where we get support and resistance from this whole thing is this is a support level or resistance level. So if price is trying to come up through this cloud here, you see where the cloud is thinner. That's going to be weaker support and resistance. But where it's very thick here, this is strong support and resistance. Also with a flat top. This flat top is a strong resistance or support area depending on which way the market is going. So here you get the price coming up through the cloud, and it gets to this point. You have to be aware of this point because this is where the strong level of support and resistance is. So the market coming through here, this would be a breakout if it closes above it, and this is one of our trading signals, and you can see it right here. The market came down, and first it observed it for a little while, but then finally it violated it right here. And this is with the Kumo breakout. And this is what we trade, a Kumo breakout. Price breaks out of that cloud. We trade that cloud breakout and look at the profit that you could have. Okay, then the same thing over here. Price comes, and then it breaks out of that cloud, and then look at the profit that you have. Okay, so that's that. Now how do we decipher these signals and know which one is good, which one is not? Well, we have something called the Chikou Span, and we're going to add that on here. It's the last component of this system. Chikou Span. Dashed line. You can make your lines any color you want, and you can make your clouds any color you want with most charting systems. And here's your Chikou Span, this dashed pink line. Now the thing about it with the cloud, people will tell you that the color doesn't matter. The color doesn't really matter, but the color lets you know if it's bearish or bullish. So if price is going up and span A is on top, then for me it's going to be blue. All right, so I know that this is bullish. But if they cross each other and then span A is on the bottom, I know that's bearish. We're in a bearish signal, so I know that it's brown. So I could look at the market. I can look at the cloud color and know that right off the bat. Okay. Now I want to trade certain signals, and I'm going to go into the signals in a moment. But your Chikou Span measures momentum of the market, and what it does and how it does it is because basically all the Chikou Span is your price right now shifted back 26 periods. So it's not the average of anything or the highest high or lowest low. It's what price is, but it's 26 in the 26 periods in the past. Now some people change this. You could change it, 30 periods in the past or more or less, but it'll become less effective. But changing this back 26 periods and using it as a momentum indicator and letting you know some certain things that you will know is that if price is moving now, but this Chikou Span is in between a price realm. So other words, let me find an area where I can really show it to you. Alright, I wanted to trade something here. So if I was going to trade here, I'll move this back right here. One of our signals is a TK crossover. Okay, so here's my crossover. And you never want to trade when Chikou Span is inside a price. You want Chikou Span to be above price or below price. Here it's inside of price. When Chikou Span is inside of price, that means we're ranging. And let me tell you why. Because 26 periods ago, we're still in the same area. Okay, so here's this level here, and here's this level here. Let's put a line here so you can see it. Basically, here's this level, and then here's this level. I know that I'm not in a trend because 26 periods ago, Chikou Span was inside of this price. So if Chikou Span's inside a price 26 periods ago, that means this price is within the same price realm that it was 26 periods ago. So it surely can't be moving higher or lower. So you know that you're not in a trend. So you must be ranging. So here we go right here from this candle. We'll take it back 26 periods to where the Chikou Span was. And he was right here. A little bit below the price, but still in this realm right here. Alright, so we know that we weren't in a trend. But then this one broke out, then this broke out, then this broke out, and Chikou Span started moving. So we wanted to get into the trade because we had our signals. And I'm going to go over the signals in a moment, but I want you to understand this Chikou Span before we go on to the signals. So now I'm going to get in on this candle right here. So let's see where the Chikou Span is 26 periods ago. 26 periods ago, it's right here. So 26 periods in the past, price was up this high. So I know that if price was up that high and now price is down here, yes, I'm definitely trending downwards. I'm outside of the realm of where I was. I'm not in the range anymore. So I know that I must be moving downwards because Chikou Span is below the price of 26 periods ago. Alright, so do you understand that? This is just showing you where price was 26 periods ago. And if you're below where you were 26 periods ago, you're trending downwards. If you're above where you were 26 periods ago, you're trending upwards. But if you're still in even with price, if this line is even with this price 26 periods later, you're still in a range, and that can help you determine the momentum of the market and if you even want to get into a trade. Now the Ichimoku system is not for a market that's not trending. It's basically a good trending system. Alright, so let's get into the signals. And another thing about the Ichimoku system, you want to make sure when you get into a trade, you want that, like I said, to be above or below price. But then also you want to look out for the cloud. You would like to see Chikou Span get below the cloud or be above the cloud. You don't want anything in the way of Chikou Span, such as here. There's nothing in Chikou Span's way, and look where price goes all the way down here. But see right here, this is in Chikou Span's way, and this could hold up everything. So we want to make sure we get through there first. Alright, because if we hit this level, we can lose out and price goes back up. Now another thing that Chikou Span is very good for is showing you support and resistance levels. Everywhere you see these peaks, you can put this line. I put this line up top here, and look where the support where the resistance level is. Even if I move it down to all these areas right here, see where these peaks are, where it's hitting, you could see how the support level is there. So this support level ranges from there to here, the resistance level rather. And so if I was trading this market, I would like to see price get above this level here. So that's how you can use the Chikou Span. And so if I just do this right here, come down here, something happened here, right? So we put it right there because that's where Chikou Span stopped, peaked down there, and then it broke through. Let's see what happened with price in the future. And I didn't know anything, I just put it there because I'm basing it off of this. And you could see where this happened here, where it held there. I wasn't even looking at that, I was looking at this. And then it showed me this right here, you can see that. So this is how you can find levels of support and resistance. If I put this right here, on this peak right here, you can see that there. You can see this area here, lines right up with it. So if you don't really know how to draw support and resistance, look at these peaks, put your levels here. And if you see a whole bunch of them hitting that area, you know that's even a stronger level. But when I put that peak there, you can see what price did there. Okay? And apparently prices, I would put that there, and that's where prices stopped, at that level. So Chikou Span is also good for finding support and resistance levels by putting your lines there on the peaks and You could do that through every chart, any chart, way back in time, and bring it back forward and still see the same thing. All right. So now when we're trading, we have signals, okay? And there's basic signals that you want to have when you're making a trade. So if we're going to get into a long trade, the first thing we're going to look at is where's price. Price has to be above the cloud to go long. So anything above the cloud is bullish. Anything within the cloud, we have turbulence, and you want to get outside of the cloud before you do anything. So you don't you don't trade in turbulence, okay? Just like flying a plane, they don't want to be in turbulence. They want to get above or below, get outside of that turbulence level or area. And we want to get outside of that turbulence level right here. We don't know what the market's going to do. We can't see. We're in the clouds. We want to get outside of the cloud. We don't know if we're going to go higher here or if we're going to go lower. So we wait to get outside of the cloud to give us more information. All right. And the information was we're going higher because we broke out of the cloud. But we need something to decipher signals so that we know that this is a strong or weak signal. Now, we'll get deeper into this Chikou Span thing, and if you want to use it and if you don't, but I'm teaching you the whole system how it's supposed to be. So this is a breakout. We're going to get in on this breakout. This candle broke out, closed above, so we want to look at this Chikou Span 26 periods ago. Where would it have been? 26 periods ago, it was like right here. So what we wanted to see was Chikou Span get above this level first before we get into the trade. Because see, Chikou Span could hit off of this support level or resistance level rather, and then bounce back down, and then the trade wouldn't work for us. So we want to get momentum going with the Chikou Span, and here it breaks above that level. This is where we will get into the trade right here. Now, where would we put our stop loss? We used two areas for stop loss. Well, actually we can use more than that. The main area that we're supposed to use is the Kijun-sen. But you can also use your Tenkan-sen. That's going to keep you really tight. And then you can use your Kumo cloud top and bottom, because these are your levels of support and resistance also. And I'm going to show you what I mean by that. Price is above all the lines and everything here, right here. So if price is above all these, your levels of support and resistance are going to be first level, Tenkan-sen. Price has to get through that level. So that's the first level of support. Second level is your Kijun-sen. Price has to get through that level. Third level is the top of this cloud. And final level of support and resistance is this bottom of the cloud. Okay? Now going upwards, it would be the opposite. So first level, going up, here's the support level. The first level of support is going to be the Tenkan-sen. Then the second level will be the Kijun-sen. Then the third level will be the bottom of the cloud. And our final level of support and the resistance will be this top level of the cloud, and then we go. Alright, so now we're trading this Ichimoku. We want to get into a trade. So let's talk about your TK crossovers, your Tenkan-sen and Kijun-sen crossover. That's a trade signal. Alright, and there's different types of signals. So the trade signal would be when Tenkan-sen crosses Kijun-sen from below to above, you want to get into a long trade. That signals a long trade. That signals bullish. When it crosses it from above to below, that signals bearish. So you want to get into a short trade. So if we're looking to get into a trade on a TK crossover, here's where it crossed over right here on this candle. So we would enter on this candle, right? But we want to, like I said, we want to wait for price to get outside of the cloud. Now, some people don't follow the rules, and they get in trades before we get through the cloud. So they're inside the turbulence. We want to get outside of the cloud. So when we look at that, we have to look at our Chikou Span and see where it was. And I showed you this example earlier. And also the thing about this is going to be you have strength of signals. So this is your bullish territory above the cloud always, okay? Below the cloud is always going to be your bearish territory. And where price is going to say you're bearish or bullish. And then you have turbulence, which is neutral, which is consolidation, zigzaggy all over, your volatile rather. And You don't want to do anything inside the cloud. So the strength of signal would come where the crossover happens. So if we're going, we want to be trading. This is a bullish signal here, right? So we want to be trading short. This isn't a strong signal. The strength of signal is going to be weak because it happened in bearish territory. So if a bullish signal happens in bearish territory, then that's going to be a weak signal. If this crossover would have happened inside of the cloud, it would have been of average strength signal. Now if the crossover happens down here in bullish territory, so you have a bearish crossover in bearish territory, then that's a strong signal. Alright, so that's how you get the strength of signals, where it happens. So here's a crossover right here. This is a bearish crossover, and this would be a strong signal because it happened in bearish territory. Now here's a bullish crossover, but it's a weak signal because it happened in bearish territory, but the trade worked out. Just because of the strength of the signal doesn't mean the trade won't work out. There's other factors involved in that. Alright, so wherever your signal happens, it determines the strength of that signal. So if this crosses over again bearish here, it's going to be a strong signal. You had this crossover here, that's a weak signal. This signal is crossed over and it's a bullish signal, and it happened in bearish territory, so that's weak. If it happened inside here, it would be medium strength, and if it happened up here, it would be strong signal. Now also, when you have a signal, you can see where this line is flat. Sometimes when it's flat and the market's consolidating, you'll get a couple of these crossovers and they won't be valid signals, and that's where we start using our Chikou Span to decipher if we want to get into the trade or not. Alright, so here we had a crossover right here. This is exactly where it happened, right there. So let's go back 26 periods from there. We're going to use the Chikou Span to tell us if we should get into that trade. Here's the crossover right here, so this is the candle we'll get into. We need to know where Chikou Span is. So 26 periods, Chikou Span isn't below that price yet. It's still inside the price right here. We need it to get below that price. So here it gets below the price. So let's bring this line down to show you where it got inside the price. So here it got outside of the price and broke below the price. Well, over here is where we want to get into the trade. And the market was dying out, and you would have had some profit, a little bit of profit, but then it didn't probably work out for you. But that's how you decipher your signals. So then if you're going to do a Kumo breakout, the same thing. You want to make sure this Chikou Span back 26 periods is above price and above these clouds. So you're using your Chikou Span to decipher if you want to take the trade or not, if you have enough momentum, because if you're inside of the price realm, you probably don't have a lot of momentum because you're still in the ranging area. Alright, so a crossover is determined by, the strength of the crossover is determined by where the signal happens. So one of the trading signals is a TK crossover, and that's the one I'm going to talk about right now today, and then the other one is just a Kumo breakout. So here's a TK crossover. We want to go long. Price crossed right here. Basically it crossed right here on this candle. It started to cross. The cross was ended right here. Let's see where the Chikou Span is. We don't want to get into the trade anyway though, because price is inside the cloud. But back 26 periods ago, Chikou Span is above price. So we are starting to range, we're starting to get into a trend because we're above the price from 26 periods ago. So if we moved up from the past 26 periods, then over those 26 periods we've been getting higher than what we were 26 periods ago. I hope you understand that. So we're higher than we were 26 periods ago, basically. So like I said, if you're higher than you were, then you know you're ranging upwards. But now we need Chikou Span to get above this cloud here to feel safe about our trade. And here's where it gets above the cloud, and we didn't get into the trade till up here then. And then if we do that, we put our stop loss on this. We can put our stop loss on your Tenkan-sen here or your Kijun-sen. That's going to be deep on the Kijun-sen. Now another thing about the Kijun-sen, let's see if we could go to another chart before I show you that. Find a good example. Okay, this is a decent example. Price gets farther away from the Kijun-sen here. It's telling you that this market is oversold. So price is getting farther away from the Kijun-sen. Well, when price gets farther away from the Kijun-sen, eventually the Kijun-sen attracts it back and pulls price back to it. So this is also going to help you to determine if you want to get into a trade. If price is so far away from this Kijun-sen and you're getting ready to enter a trade, you may not want to do that because you're either oversold or overbought, and the market has to come back to equilibrium. So it's going to come back to or pretty close to the Kijun-sen. So know that, and that's how you can tell if the market is oversold and overbought, and if it's in equilibrium. So if price is here's your Kijun-sen right here, and if price is way down here, and then I say I'm getting ready to get into a trade, I would say, man, this is way too far to get into a trade with price being that far from the Kijun-sen, because all price is going to do is either consolidate and wait to catch up, or it's going to pull all the way back as far as it can get close to the Kijun-sen. So you wouldn't want to get into that trade. So know that also. That's another thing to look for. Now here's a crossover, and it happened just inside the cloud. And this is a bearish crossover, so this is going to be a medium strength crossover. Here's another crossover that happened up here, and it's a bearish crossover, and so that's going to be a weak signal because it happened up here in bullish territory. This happened in medium territory, and this is always going to be medium territory no matter what the cross. So this turbulent area, and it happened in here, this is going to be a medium strength signal. Now if this would have happened just a little bit lower, this would have been a very strong signal because it's a bearish signal happening in bearish territory. And I just want to make sure you guys understand that. So now here's a crossover, TK crossover. I want to get in on the TK crossover. I need all my signals to be lined up. So here's the signals that we look for. We need price to be below the Kumo, first thing. Alright, so we have that. We need Chikou Span to be below price. We need to have our TK crossover, and we need to have a Kumo twist, a bearish Kumo twist. So those are the things you're going to ask yourself when you look at the chart, when you get ready to make a trade. Alright, I have a crossover because I'm trading the TK crossover. So here's my TK crossover, so that's bearish. Where's price at? Price is below the cloud, that's bearish. That's my second thing. Where's the Chikou Span at? Is Chikou Span below price? Chikou Span is not yet below price. And where is my future cloud? It's a crossover. It's a bearish crossover. So every sign is bearish. We need to wait for Chikou Span to get below the price before we trade. Okay? So you want to make sure you get all your signals and then make your trade. And each signal is going to be your TK crossover. You want to make sure you have a TK crossover, bearish or bullish depending on which way you're going. So if you're going bearish, you want a bearish crossover. You don't want your Tenkan-sen to be above Kijun-sen. That's a bullish sign. That's a bullish sign. You want that to be below. And you want, the main thing is you want price to be below your cloud if you're going to be trading short. So that's another thing. That's the main thing you're going to see. That's how you look at the chart right away and know which way you're trading. And then the next thing is you're going to want to have, you have your TK crossover, you have price below the cloud. Your next thing is you want to have Chikou Span below the price below price. All right, and then you want to have your future cloud your Kumo twist. You want to have a bearish twist or a bullish twist depending on what you're trading. So let's look for a bullish trade. with a TK crossover. Here's another one. This is a bearish crossover, but it's in medium strength signal because it happened inside this cloud. Once again, if it happened up here, it'd be weak signal. If it happened down here, it would be a strong signal. Hope you guys understand this. Alright, so here's my crossover. I want to go short. I don't want to trade inside the cloud. I wait for it to come outside of the cloud. Here's the candle that came outside the cloud. I get in on this candle. Let's see if we got everything. First thing I ask myself, where's price? Price is below the cloud. Bearish. My TK crossover. Bearish. Where is Chikou Span opposed to price 26 periods ago? It's below the price. Bearish. We would like to see it get below this cloud. That would be better for us. And then finally, where is our Kumo twist of 26 periods ago? I mean 26 periods in the future. And here it is. So it would be this right here. It already crossed. So you have a bearish signal. Everything is bearish. We're good to go. We wait for Chikou Span to get below this level here, and we get into the trade. So we get in right here. We put our stop loss a little above the cloud because that's a support and resistance area, right? And then to get ultimately, you can put it all the way up here at your Kijun-sen, a little bit above your Kijun-sen. Now that's going to make it deeper, so you can keep it here to keep it from being as tight. And the reason you can put it here is because this is a support and resistance level. So if price came back, we would expect it to hold that level. If it didn't, it breaks that level, maybe we're changing. Always know. Now here's how you get out. Here's your exit signals. Alright, so we got out on the crossover. There's two ways we can get out of this. We can either get out when price crosses over the Kijun-sen. When price crosses the Kijun-sen, we do want to get out because that's signaling a change of trend. So the direction of this chart may be changing. But we wouldn't have got out here maybe because we never got a crossover. So we just get in and out on the crossover. So this crossed over, we got in. Now we're waiting for Tenkan-sen to cross back over, and then we'll get out. Okay, so you could get out that way, or you could get out on the price crossing the Kijun-sen. And now those are the two exit signals that you can use that way. And that's all I'm going to talk about for that TK crossover and for deciphering your signals. So if I get a TK crossover, a bearish signal, and it happens down here, what is that? If it happens down here, is that strong, weak, or neutral? It would be a strong signal because it's down here in bearish territory. If I got a bearish crossover up here, a bearish TK crossover up here, what would that signal be? Would it be strong, medium, or weak? And if I got it up here, it would be weak. And if I got it in here, like I did get it in here, it's a neutral signal. Alright, so that's it with that part of the system. Let's look at one final part, just the Kumo breakouts. Always know when you get into a trade, look to see how far away you are from the Kijun-sen, because you know it's going to try to get back close. Now, the thing that I'm trying to find out and doing observations on is trying to get an average of how far away the price can get before it pulls back. Usually, what's the average? How far away? So do I say I'm 200 pips is too far on a certain price time frame, or 300 pips? So I'm trying to make sure I have those rules all straight before I say I'm not getting into a trade. Some other traders that I know and talk to, they do have a set number, but I want to make sure myself that these numbers are valid for my situation. So I'm doing research on that, and I'm also doing some research on Kumo breakouts as far as stop loss levels. I'm trying to keep them as tight as possible, but that's for a later date to talk about after I get all this done. And I'm doing it with so many pairs, and as far like almost 10 years back with each pair, so it's a lot of information, takes a lot of time. Let's go with some breakouts, Kumo breakouts. Okay, we're going to do one thing. We're going to take these crossovers away. Well, no, we're going to leave them on because we're going to stay traditional. I want you guys to learn the proper way. When I'm trading a breakout myself, I don't need these. I don't look at them. I don't need to know if they're crossing or not. Usually if the price is breaking out of a cloud, these are going to be crossed over already to the way that you want to go. Okay, but you're supposed to ask yourself these signals when you break out of this cloud here. TK crossover, bearish. Chikou Span below price, bearish. Price below Kumo, bearish. Kumo twist, bearish. All bearish signals, trade good to go. Kumo breakout. The momentum is good because you can see Chikou Span below price. That shows you have good momentum. We want to make sure we get through the support and resistance levels, and we do. But the momentum is very good because we're way below price. And now, once we clear this level here, strong, very strong. Nothing in our way. Nothing to stop us. And we go all the way down here. Now, like I said, you can draw your support and resistance levels. See all these peaks? Boom, boom. You put a line right there. Let's put a line there. This will show you stuff in the future, and you can look at that in the past too. And in the future, look what it did from this. Let's see what it's doing in the past. And in the past, that level is valid. You can see that level. Price bounced on that level. This is getting farther back. Look at that. Chikou Span knows. So just use that as your support and resistance. Finding levels. Also use your bottoms, your flat tops, flat bottoms, support and resistance. Flat bottom. You can move a line right there. That'll show you future and past support and resistance. Okay, so you see that line there, you can move it there. You can see this flat bottom right here. You could put a line there. And that flat bottom way back here, pretty much with the Chikou Span in the future, that's way back there. So it's showing you things that can happen and show you support and resistance in the future. All right, let's show a couple more Kumo breakouts. When you're getting ready to trade a breakout, the thicker the cloud, the harder it is for a price to break through that cloud. That's a big level of support and resistance. The thinner the cloud, the weaker the support and resistance. So when we get a breakout, we want to see thin clouds like that. This isn't really thick, and price comes through there. So let's trade this breakout. Let's see how we can do this. Alright, so here we are. I'm looking at price. I got a crossover. Now price breaks above. So I want to trade this Kumo breakout. So I need to look at all my signals. First signal is where's price? It's above the cloud. Bullish. We're going long. Okay. Second signal. Chikou Span. Your TK crossover. It's bullish. Tenkan-sen is above Kijun-sen. That's bullish. Okay. My third thing. Where's my Chikou Span? So this is the candle I'd get in. This closed, and I want to get in here. Chikou Span 26 periods ago. It's above price. We're bullish. We love to get it above this cloud though, and it didn't get above the cloud yet. So if we will wait till it gets above the cloud, we'll be better off. And then final signal of all the signals, where's my Kumo future? Did I get a Kumo twist yet? 25, 26 periods. It's just twisting. So it's brand new, just starting to happen. So if we took the trade right here on this candle, and Chikou Span was right here, Chikou Span didn't get above that cloud yet. So Chikou Span said, well, I'm coming back down for a little while. I need a break. And Chikou Span took a break, so did the market. So now we wait for Chikou Span to break out of the cloud. It breaks out right there. So if we didn't take that breakout because Chikou Span wasn't out, we take it when it's 26 periods. It would have been after this candle closed. We get in on this candle. You can put your stop loss a little below this flat bottom, this flat top, because that's going to be a support level, right? So you put your stop loss below there. And sure enough, the trade works out for you. Now you see this right here, this flat level right here, that means we're consolidating on a more medium term range. That means we're in a range, we're consolidating, and sure enough, price pulled back, it ranged for a little while, consolidated right here, and then took off again. Alright, nothing is in Chikou Span's way. Chikou Span is above everything. This trade can go on for a little while. So that's your breakout. That's how you trade breakouts and crossovers. And then there's other ways of trading. I trade these fractal levels, you know, because you're not always going to catch the breakout or the TK crossovers. So I like to trade support and resistance levels. So I trade these fractal levels here. And once price breaks above that level, I get into the trade. But I'm not going to talk about that trade right now, that kind of trading. I just wanted to show you the two basic kinds of ways to trade with the Ichimoku system. Now there's other ways. You could trade Chikou Span crosses. You could trade Kumo breaks, Kumo bounces. You can trade Kijun break, Kijun bounce. I don't trade all those ways, but those are some of the ways that this system has. And now I'm just about done. I don't have much more to really explain. Showed you a couple examples. You'll learn more examples as we go on, as you look at my videos. Now look at this messy stuff right here. This is something I would not even think about trading. All I would do here is look. You could see there's so many crossovers in here because this market is ranging in this area. So the way I would trade this myself, I need price to get out of this range. And then I know we're getting into a trend. If price gets outside of this level, now see Chikou Span here broke out and you got a breakout here, but this is not good to trade because you could see what it's doing in the past. It's just flopping all over the place. So you want to get this stuff moving, get everything starting to trend up or down. You want to get these lines sloping. You don't want to get these lines going flat. You want to get these lines going down or up. And right here they're going sideways, and so the market is going sideways. You want to get them going like this. See that? That's what we want to see. So that I would wait for the level to break this, close below this level, put my stop loss above this support level. You can see that level. That's where Chikou Span says the support level is. Here's another level that it's telling me, but here's the real ultimate level. So I want to see price get below that level, close below that level, and then use that level to trade. So that's a way you can trade the Kumo, the Ichimoku system. And that's it. I showed you the breakouts. I don't have time to really look for a breakout that didn't work. But if you look for the things I told you, then you'll be okay. So when you make a trade, TK crossover or breakout, first ask yourself, where's price? Is it above the cloud or below the cloud? It needs to be above the cloud if you're going to take a bullish trade, and it needs to be below the cloud if you're going to take a bearish trade. That's the main thing right off the bat. And then the second thing is, where's my TK crossover? Do I have a TK crossover that's bearish or bullish? If I'm going long, I need my crossover to be bullish. I need Tenkan-sen to be above Kijun-sen. And if I'm going short, I need Tenkan-sen to be below Kijun-sen. Finally, third, I need my Chikou Span to be above price or below price, not inside price realm. I need it above or below price. So that would be bearish. If I'm below price and I want to take a bearish trade, I need Chikou Span to be below that price. And if I'm taking a long trade, bullish, I need Chikou Span to be above price. That would be my third thing. And then my fourth thing would be My Kumo twist. Is my twist in the future bearish or bullish? All those signs, and then your trade is good to go. Um, that's it. Pretty sure that's pretty much it. I think I covered everything, and if I haven't, we'll throw that in other videos as we go on. But this is for the very beginner, for you to learn the system and understand the system and know the system. Look this video over and watch it a couple times, get to know it, and then you'll know your system. Traders, I hope I'm helping you. I hope I'm teaching you this. Eventually I'll be showing you some non-traditional stuff, and then probably have all the Ichimoku chartists uptight. But there's other ways to trade, so I'm going to show you those ways, non-traditional. So traders, until next time, hopefully you have a great and blessed trading day, a great and blessed day period, and God bless. So long.